Good evening, everyone. My name is Paul Young. I'm going to walk you through corporate welfare. It's an area that comes up in a lot of conversations when you talk to people, both in government as well as just an average conversation, because there's a lot of misconceptions about what corporate welfare is and just the overall policies that drive it in terms of decisions made by both government and business. Now, my presentation is just one perspective of corporate welfare. It's not deemed to be the only perspective. You're more apt to go out and look at different sites to get the wide opinion, both on the left side of the votes, which is more of a socialistic approach, as well as a pro-business approach, to get an idea what it takes to compete and how governments support business as part of its startup, as well as supporting its expansionary plans. Here's a little bit about myself. I'm a CPA CGA by trade, but I've got 25 years of experience both in academia, industry, as well as financial solutions. Now, what I'm going to talk about here is corporate welfare. Basically, in a nutshell, it's a handout. And when people see handouts, they like to know that they're getting maximum value for that. When you see other issues from healthcare, education, people on welfare itself, they want to know why money is going to support profitable corporations. And that's really, in a nutshell, what happens. Now, I'm just showing you briefly a financial statement. This statement's for Praxair. I'm not picking on this company for any reason other than to show you the flow of income taxes and just to show you what happens with a corporation. Praxair trades on the New York Stock Exchange, so it's accountable to investors. So it provides dividend yields as well as other things in terms of its maximization of its profit to get a return to its investors. Okay. Now, that being said, when a business operates in the global marketplace, it's impacted by government regulations, from taxation rules to how it manages cash flow. So in a lot of cases when you do globalization with countries, some countries put specific rules on how that cash can exit a country. Now, sometimes they only allow certain rules of how that happens. That's where you get into more of the transfer pricing rules, what you'll see down below. And that's critical to understand the drivers here, because cash is king to any business. It's also king to governments. They like to be able to have that cash as part of through taxation rules and have access to it to do their own things in terms of supporting their policies. And that's things you need to understand in terms of how the flow happens in a business. And at the top level, corporation will have its headquarters, typically if it's a U.S. company, in the U.S., but it will have multiple locations throughout the world, and decisions are made of how to operate that in the flow of cash and capital. And that's what you're seeing down below with intercompany loans, sales, dividends, and R&D. This is all part of the flow of a business in terms of how it operates in the global marketplace. The only reason why I'm positioning this out here is so that you can understand how business operates. That being said, government comes into play. They want that foreign direct investment. Why? Because they want to bring jobs to their country. So what are they going to do? They're going to try to find ways to entice business to come there. So either through lower corporate tax rules, using currency, using different ways to get business to invest there. Business, on the other hand, wants access to a marketplace. So they're going to look at how they work together with them to basically diversify its market to expand into new locations. So what you might see happen with government is a bunch of different things. They might give grants, which is strictly a handout to that company. They may give interest-free loans to a business to provide the necessary capital or entice it to expand its operations in a domestic market, let's say like Ontario. It may also throw in tax credits for hiring, other grants as part of land, or any sort of development to entice them. So that's what you're seeing happen, or R&D funding. So they may have specific programs to help bring goods to market. So when you see the whole example, these are all different programs that governments will utilize to try to attract business. Now, that's where people come in and say, you know what, is that the right way to do it? Probably not, but that's how it's operated, and that's where you see the terms of the marketplace. Now, all countries and provinces and states do this. So if you don't play part of it, then you lose out to playing that game. It's a game. As much as people don't like it, it's a vicious game, vicious circle that you play with business in order to keep jobs and attract new ones. The issue at hand. Government gives money to profitable companies. That hurts people. Why are you giving money to businesses that are profitable? Second point, government picks winners and losers. So why would they go to AB company and give money and not to CD company? So how's that work? And the one good example is the automotive bailout that we did as part of the last recession. Is General Motors and Chrysler asked for a bailout, Ford did not. So you can see where you get into a point of time where some businesses within a sector may get funding where others may not. The other risk that you do is if you bail out a business that was going to fail in its own right, then you poured in bad after bad money to a business. Now, a lot of cases why businesses do not succeed, typically they do not adjust to market conditions. Maybe they've got a product that they didn't move forward. Maybe they're in a marketplace that's very competitive and they're not able to get control of their cost structure and they're not able to execute. So that's where you see where giving money to a business that's failing isn't necessarily the proper use of cash. What should be done to support business? A couple things. Trade and investment deals are critical. What that means is, so if I'm a company in Canada, I want to have the ability to go to additional markets to expand into those areas. You can't just open a door and go into those marketplaces, so you need those. Access to capital is still critical and a critical driver to small, medium-sized business, and it's something where government, yes, should be involved with to help them access capital to expand their opportunities, but they should be done on a business case by business case basis. They shouldn't be just handed out. There should be a business case to build up, and it should be aligned with the overall policy, whether it's investment tax and anything else going into in terms of what's required to move a business forward. Tax reforms, whether that's looking at excise taxes, whether that's looking at payroll, corporate taxes, consumption taxes, reforming the rules, making them line, see how you compare to other jurisdictions of the world, and how can you keep competitive. Streamlining regulations, environment and assessment processes which kill business to get a project off the ground need to be streamlined. Some countries don't do a very good job of skills development. So if we're looking at moving into more mining, oil, or other advanced manufacturing, we need to make sure that we align our school systems to take that uptick. Government also needs to make key investment in infrastructure, whether that's port, rails, or bridges, because exports, in particular in Canada's case, drive. Like when you've got a country of 35 million, in order to provide the quality of life for people for social programs, you need to have business investing and expanding, creating that corporate tax revenue, payroll tax revenue, and the only way they can do that is by having the capacity to get goods to market quicker and faster. And that's where you see key investments in infrastructure, because when you get into ports, rails, bridges, and all that, they're either controlled by the municipality, provinces, or the federal government, and there needs to be a clear strategy how you're going to make those programs or money available to help business. Now, this is only one presentation in terms of corporate welfare. I'm not going to pick on corporations. I've spent a lot of time working with corporations all my life. What I will say is corporate welfare is here to stay, because the fact is everybody plays that game. Are there things that they can do to curb it? Yes. And that's something that we need to push on government policy, but it has to be the right mix. I've always said to people, it isn't one policy that attracts business, so picking on just corporate welfare is not the solution. What you should be doing is looking at a comprehensive strategy. How do you attract business that makes sense from a government's perspective, that will support the taxation revenue that will drive social programs? Thank you.